Joining us now is Rohit Kulkarni of MKM Partners and Gene Munster of Loop Ventures. My main question to both of you, and Gene, I'll start with you, is where earnings expectations are for this group. Have they come down enough to reflect the reality of what we're looking at next year?
The simple answer, Sarah, is unfortunately, I don't believe that they have. In the case of Meta, I think that they have, but for the most part, all these large cap tech companies, most of them are going to need some downward revisions. And the market, especially for tech investors, moves at a more rapid pace. And I think when we think about the December quarter specifically, I'll just highlight one example of the work that I think the buy side needs to do going into a print. Apple, I think their business is doing exceptionally strong. However, there might be some softness to that iPhone number. They said as much on November 6th. And you really need to look at the iPhone number, the December quarter, in the context of the December plus the March quarter. That is an exercise that I think investors are probably not going to want to go through. They're going to probably sell first and ask questions later, which kind of speaks to, I think, some of the vortex that a lot of these tech companies. I generally think it's going to be a messy December quarter for large cap tech.
Rohit, what are you doing with your expectations for some of the names you cover?
Yeah, I agree with Gene. I think in pockets across internet, I think expectations are coming down, but not fast enough. We think Q2 outlook would be the clearing event. So still, 1Q outlook is something that people will still need to come down. In pockets, public cloud computing is decelerating at a rapid clip. You have advertising headwinds, you have e-commerce headwinds. So the main swim lanes of internet, we are seeing headwinds, and I think when do estimates bottom out? I think 2Q outlook. So I think, as Gene said, it's going to be a messy 1Q outlook event, and probably we are going to be bracing for more downside here. Whether that's in the stock right now, in some cases, probably we are getting there. In Amazon's case, probably we are getting there a lot. Amazon closer to $80 is probably where almost all the bad news is priced in, I guess.
Right, so that's
Sarah,
what I was going to ask next. Oh, go ahead, Gene.
Yeah, can I add on to that? Is that my experience is that agree that it's going to be tough, but my history is that it's rarely priced in, and as much as bad as it's been for tech investors, I'm feeling it every day. As bad as it's been, I think that, and as much anticipation around negativity, 3/4 of the time it's not priced in, and so you might get lucky and happen to own the one where the numbers go down and the stock goes up. But I still think that it's largely not priced in.
So I'm looking at your picks there. You like Meta, Apple, not surprising, Gene, and Take-Two Interactive. Why are these the best opportunities in the space?
Well, when it comes to Apple, I think that, again, this is the near term versus the long term. Near term, buy side needs to have their coordinates correct going into the March quarter as well, understanding that. But I still think that demand is strong. This is just the fabric of our tech. And so I think that Apple is going to continue to power through. I still think that they'll show a headset in WWDC next year. I think that that's going to be a catalyst for innovation for them and multiple expansion. And I'm inching up. I've just been standing right at that 50-50 line on the car. But it's going to be something that ultimately I think in the next couple of years can be a massive, can triple the size of their business. And so that's Apple, Meta. I think that
a lot of analyst love for Meta lately.
Surprising that wasn't the case a month and a half ago, but in the case of Meta, Zuckerberg's comments at the deal, New York Times deal book on December 1st suggests that engagement's strong, and I think that's ultimately the most important piece. They're the only company to make so those are two that I focus on.
Rohit, for you, you mentioned Amazon. You think all the negativity there on earnings is priced in, so I assume that's one of your top picks, and I think Uber's on your list too.
Yeah, I agree. As in Amazon, when you're having shrinking markets, I feel Amazon gains market share in all three markets that they operate in: commerce, advertising, and public cloud. I feel they are going to be gaining share throughout first half of 23, and we'll start to see evidence of that. I think Amazon is also probably 6 to 9 months ahead as far as cost cutting is concerned, and we start seeing that leverage as the quarters progress. Again, as I said, probably there is one more quarter of haircuts for Amazon that we need to go through, and then as the market start to stabilize, I feel Amazon is the one that has the most absolute upside in mega caps in my book. Uber, I feel fundamentals have been improving throughout the year, but stock has had negative sentiment on regulatory things. So I feel as fundamentals stay stable and they continue to execute, I think there is a catch up here where valuations are extremely disconnected with what Uber has been executing over the last 12 months. Uber is the only large cap company in the 20 companies that we looked at that have had upward revisions in revenues throughout the year. Not a single mega cap company that we looked at has had that, yet Uber stock is down 40%. I feel that disconnect doesn't last too long, so I think that's why we like Uber as well.
Right, Gene, we'll leave it there. Thank you both for joining me with some of the
Thanks, Sarah.
opportunities in what has been another week here where tech has gotten slammed.